Unlocking Wealth, the best mutual funds for fast growth. Hey everyone, what's up? And welcome back to the channel. Today we're diving deep into the world of mutual funds, specifically those high-growth equity funds that can help you build serious wealth. Look, I know a lot of people talk about getting rich quick. That's not what this is about. This is about making smart, strategic investments in your future. And hey, stick around until the very end because I've got something really valuable for you. We're talking about a reward worth 21,000 rupees for those of you who are serious about taking control of your finances. Now, before we jump in, remember I'm not a financial advisor. This isn't financial advice, and past returns are never a guarantee of future success. What I'm going to do is break down some of the best performing mutual funds out there, the strategies they use, and how you can potentially use them to reach your own financial goals. Because let's face it, building wealth takes time, but it also takes knowing where to put your money. So buckle up. Let's learn how to make your money work harder for you. Small cap equity funds, high risk, high reward. Okay, let's start with the bank's small cap equity funds. These are the daredevils of the mutual fund world, investing in, you guessed it, smaller companies. Think of these as the startups, the up-and-comers with the potential to explode in value. Now, the reason these have the potential for massive returns is simple. They have more room to grow. Imagine a company with a market cap of, say, 500 crores. Now, if they have a good product, a solid team, and the market responds well, their value can double, triple, even quadruple in a relatively short period. That's the kind of growth potential that gets investors excited. But, and this is a big but, high reward always comes with high risk. Small cap companies are often more volatile, their stock prices can swing wildly, and there's always the chance they might not pan out. Remember, investing in small cap funds is like betting on a promising rookie in cricket. They might become the next Sachin Tendulkar, or they might fizzle out. It's all about managing your risk tolerance and understanding that these are long-term investments. Don't go throwing all your money in expecting to get rich overnight. Mid-cap equity funds, finding the sweet spot. Next up, we've got mid-cap equity funds. As the name suggests, these funds invest in companies that fall somewhere in the middle of the market capitalization spectrum. Think of these as the established players, the ones who have already proven themselves to some extent, but still have plenty of room to grow. Now, the beauty of mid-cap funds is that they offer a bit of a balance. They're not as volatile as small-cap funds, meaning your investment won't swing as wildly, but they still have the potential to deliver solid returns. It's like finding that sweet spot between risk and reward. One of the key advantages of mid-cap funds is that they often outperform large-cap funds over the long term. This is because mid-cap companies are still in their growth phase. They're innovating, expanding, and gaining market share. However, it's important to remember that mid-cap funds are not without risk. Economic downturns or industry-specific challenges can impact their performance. Just like any investment, diversification is key. Chapter 3. Aggressive growth funds, fast track to wealth. Now, for those of you who are a little more adventurous, let's talk about aggressive growth funds. These funds are like the sports cars of the mutual fund world, built for speed and performance. They typically invest in a concentrated portfolio of high-growth companies, often in sectors like technology, healthcare, or consumer discretionary. The goal here is simple: maximize returns, and they do this by taking on more risk. Just like a sports car, aggressive growth funds can be exhilarating when things are going well, but they can also be a bumpy ride. Let me give you an example. Imagine you invested 10,000 rupees in an aggressive growth fund 10 years ago. Now, I'm not saying this will happen to everyone, but imagine that investment grew at an average annual rate of, say, 15%. Today, that 10,000 rupees could be worth over 40,000 rupees. That's the power of compounding and aggressive growth. But, and this is crucial, aggressive growth funds are not for the faint of heart. They are designed for investors with a high risk tolerance and a long-term investment horizon. Chapter 4. Sectoral thematic funds, riding the wave of the future. Now let's shift gears and talk about sectoral or thematic funds. These funds focus on specific sectors or industries that are poised for growth. Think renewable energy, artificial intelligence, electric vehicles, or even online gaming. The idea here is to capitalize on the growth potential of a particular sector. For example, if you believe that the renewable energy sector is going to boom in the coming years, you might invest in a sectoral fund that focuses specifically on solar, wind, or other clean energy companies. The advantage of sectoral funds is that they allow you to target your investments more precisely. If you have a strong understanding of a particular sector and believe in its long-term growth prospects, this can be a great way to potentially outperform the broader market. However, it's important to remember that sector performance can be cyclical. Just because a sector is doing well today doesn't mean it will continue to do well forever. Chapter 5. Multi-cap funds, the diversified approach. Finally, let's talk about multi-cap funds. These are like the all-rounders of the mutual fund world. They invest across different market capitalizations, from small cap to large cap, giving you exposure to a wider range of companies and sectors. The beauty of multi-cap funds lies in their diversification. By investing in companies of different sizes and sectors, you're spreading your risk and reducing the impact of any single company or sector on your overall portfolio. Think of it like this. If you put all your eggs in one basket, and that basket falls, you lose everything. But if you spread your eggs across multiple baskets, even if one falls, you still have others. Multi-cap funds are a great option for investors who want to participate in the growth potential of the equity market, while maintaining a diversified portfolio. They offer a good balance between risk and reward, and are suitable for investors with a long-term investment horizon. So there you have it, a breakdown of some of the best mutual funds for building wealth. Remember that 21,000 rupees reward I mentioned earlier? Well, here's how to claim it. Take a screenshot of this video right now and send it to us on WhatsApp at WhatsApp number. We'll send you back 10 free financial calculators to help you on your wealth building journey. But the real reward is taking control of your finances and making smart investment decisions. Whether you're just starting out or you're a seasoned investor, there's a mutual fund out there for you. If you found this video helpful, do me a favor and hit that like button. Subscribe to the channel for more videos like this, and share this with anyone else who's trying to build wealth and achieve financial freedom. Thanks for watching.